Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries hidden within corporate filings. And today we've got a doozy from T. Rowe Price. Get ready because this report is going to reveal exactly where your retirement money is going, and trust me, it is not always where you'd expect. We're diving deep into the Retirement 2015 Fund's semi-annual report for November 2025. This isn't just a dry financial document, it's a window into how your investments are performing and what that actually means for your future financial security. Before we jump into the nitty-gritty, if you love getting clear, no nonsense financial insights directly from the source, make sure you are subscribed to the channel. And if you want to connect with other savvy investors and discuss these findings further, join our Discord community. The link is in the description below. Alright, so this is an official report filed with the US Securities and Exchange Commission, or the CC. It is called a Form N-CSR, and it tells us how registered management investment companies like this mutual fund are doing. It is basically a shareholder report. This report covers the period from the 1st of June 2025 to the 30th of November 2025. We're looking at the T. Rowe Price Retirement 2015 Fund, and they've broken it down by different share classes. You've got your investor class, advisor class, R class, and the I class. Different classes can mean different fees, which we'll get to. Let's talk about something everyone cares about, costs. For a hypothetical $10,000 investment, the costs over these 6 months varied quite a bit by share class. The investor class cost you about $26, which is 0.49%. The advisor class was a bit higher at $39, or 0.74%. And the R class, that one hit you with $52, or 0.99%. The I class was the cheapest at just $18 or 0.34%. So the class you choose definitely impacts how much of your investment is working for you versus paying fees. Now for the big picture, the total net assets of the fund were a massive $5,248,437,000. That is over $5 billion managed by this fund. And how many different investments are they making? They hold 32 distinct portfolio holdings. Now that might sound like a lot, but in the world of mutual funds, especially a fund designed to be a single investment solution, this number is actually pretty focused. And when it comes to how actively they're trading, the portfolio turnover rate was 7.1%. This is actually quite low, which generally suggests a buy and hold strategy, meaning they're not constantly buying and selling. This can be good because frequent trading can incur higher transaction costs and potentially lead to more capital gains taxes. Though in this case, since the fund invests in other funds, the turnover is really determined by the underlying funds. So, what is this $5.2 billion actually invested in? They've got a pretty balanced approach. Domestic equity funds make up 36%, meaning they invest in funds that buy stocks of US companies. Domestic bond funds are close behind at 34.7%, focusing on US debt. International bond funds account for 13.2%. And international equity funds for 13.1%, so they're spreading their bets globally. There is also a small slice, 0.3% in US Treasury debt and 2.7% in short-term and other investments. This allocation shows a strategy that balances growth potential with stability by diversifying across different asset types and geographies. Now let's get specific. What are the actual top 10 investments within this fund? Remember, this fund itself invests in other T. Rowe Price funds. So we're looking at their biggest holdings in other mutual funds. The largest single holding is the T. Rowe Price New Income Fund at 15%. Then comes the T. Rowe Price Limited Duration Inflation Focused Bond Fund at a hefty 13.7%. The Value Fund and Growth Stock Fund both sit at 6.8%, following those of the International Bond Fund at 5.6%, Hedged Equity Fund at 4.9%, Equity Index 500 Fund at 4.6%, US Large Cap Core Fund at 4.4%. International Value Equity Fund at 4%, and lastly, the Overseas Stock Fund at 3.6%. It is interesting to see that the top two holdings are bond funds, indicating a significant allocation towards fixed income, which aligns with the retirement aspect of the fund's name, aiming for some stability. Digging into the financial highlights, we see the net asset value per S-hair for the investor class. For the 6 months ending the 30th of November 2025, the NAV began at $13.01 and ended at $14.05, showing a healthy increase. The total return for this period was 7.99%. Looking back further, the returns have been quite varied. For example, the year ending May 31, 2021 shows a strong 23.42% return, but the year ending May 31, 2022 saw a negative 0.86% return. This shows the usual ups and downs of the market, but importantly, the fund has managed to grow its net asset value over the reporting period. Let's look at expenses. For the investor class, the net expenses after payments by T. Rowe Price Associates was 0.49%. This really ties back to that cost we saw earlier. The portfolio turnover rate remains consistent at 7.1% for this period. The net assets at the end of the period for the investor class were about $1.88 billion. Now for the advisor class, their net asset value per S-Hair went from $12.95 to $13.97 during the same 6-month period. The total return was 7.88%, similar to the investor class. They've seen fluctuations over the years, but the trend has been positive over the last 6 months. The net expenses here were higher at 0.74%. which again correlates with the higher costs we noted for this class. The net assets for the advisor class were considerably smaller, around $133.8 million. This smaller asset base for the advisor class might suggest it is more geared towards specific distribution channels or advisory relationships. Moving on to the R class. Their net asset value per S-Hair went from $12.73 to $13.72. The total return was 7.78%, and as expected, the net expenses are the highest for this class at 0.99%. The net assets for the R class were about $97.4 million. This class likely caters to specific retirement plans where higher fees may be accepted in exchange for other benefits or distribution support. Finally, the I class, the most exclusive with its higher investment minimums. Their net asset value per S-Hair grew from $13 to $14.05. The total return was a solid 8.08%, slightly outperforming the investor class, and importantly, their net expenses are the lowest at just 0.34%. The net assets for the I class were the largest at over $3.1 billion. This makes sense given the higher investment minimums, indicating that larger institutional investors or high net worth individuals are opting for this class to minimize their costs. Now we get to the heart of what is actually inside this fund. This section details the portfolio of investments as of the 30th of November 2025. Remember, this fund invests in other T. Rowe Price funds. The bond funds category makes up 47.9% of the net assets. Within that, you see significant holdings in the New Income Fund and the Limited Duration Inflation-Focused Bond Fund, reflecting a strong emphasis on income generation and inflation protection within the bond allocation, which is pretty smart given the economic climate we've seen. Equity funds make a slightly larger portion at 49.1%. Here we see the Value Fund, Growth Stock Fund, and the Equity Index 500 Fund all featuring prominently. This mix suggests a strategy that aims for both traditional stock market exposure and more targeted growth and value strategies. Then we have the short-term investments totaling 3.0%. Most of this is in a T. Rowe Price US Treasury Money Fund with a 7-day yield of 4.05%. This is essentially a very safe cash-like holding. On top of that, there is a small portion in US Treasury bills, which are short-term government debt. This part of the portfolio is all about preserving capital and providing liquidity. Interestingly, they also have futures contracts. These are used for managing risk or cash flows. They have short positions in MSCI EAFE Index, Russell 2000 E-mini Index, and S&P 500 E-mini Index contracts. These are essentially bets that these stock market indexes will go down. The notional amount, which is the total value of the contracts, is quite significant in the tens of millions, but the actual value or the unrealized loss on these contracts is much smaller. In the thousands, this suggests they might be using them for hedging purposes rather than speculative bets. And here is something important. T. Rowe Price invests heavily in its own affiliated companies. That means T. Rowe Price Retirement 2015 Fund is buying shares of other T. Rowe Price funds. For example, under affiliated companies, we see substantial realized gains and changes in unrealized gains for many of their own funds like the Dynamic Credit Fund, Growth Stock Fund, and International Value Equity Fund. This is a common practice for fund families, creating internal synergies and fees, but it is good to be aware that your money is primarily flowing within the T. Rowe Price ecosystem. The notes clarify that these underlying price funds are for the most part Z-class shares, which typically have the lowest expense ratios. Looking at the statement of assets and liabilities, the total net assets are indeed over $5.2 billion. The liabilities are quite small in comparison, less than $5.1 million. This indicates a very sound financial position for the fund itself, and importantly, it breaks down the net assets per share for each class again, confirming the NAVs we saw earlier. The statement of operation shows us the income and expenses. For the 6 months ending the 30th of November 2025, the income distributions from underlying price funds were over $80 million. The total expenses were around $11 million, which includes investment management and administrative expenses, and those are Class and Advisor Class 12B -1 fees we discussed. Net investment income for the period was about $69 million. On the investment side, they had pretty significant realized gains on sales of underlying price funds, over $84 million, and a net realized gain of $70.5 million after accounting for futures contracts. The change in net unrealized gain, meaning the increase in value of their existing holdings, was a massive $266.7 million. This shows strong performance from the underlying investments. Cumulatively, the funds saw an increase in net assets from operations of over $406 million over these 6 months. The statement of changes in net assets further breaks down where the money came from and went. Over this 6-month period, the fund saw a significant increase in net assets from operations, around $406 million. There were no distributions to shareholders during this particular 6-month period, but there were significant capital share transactions where shares were sold and redeemed. Now, let's look at the notes to the financial statements. These are crucial for understanding the details. The fund is an open-end management investment company investing in other T. Rowe Price funds. It has a glide path strategy, meaning its asset allocation becomes more conservative over time, which is typical for target date type funds. The different share classes are explained here, including those Rule 12B -1 fees for the advisor and R classes, designed to compensate intermediaries. The I class requires a substantial minimum investment, which is why it has such low expenses. Under valuation, they explain how they determine the fair value of their investments, which is based on market prices and independent pricing services. For the most part, their investments in underlying price funds are valued at their closing net asset value, or NAV, which is pretty standard. The notes also detail their use of derivative instruments like futures contracts. They use these primarily for risk management to stay fully invested or to help with rebalancing. The risks associated with derivatives are highlighted, and they explain that they don't use hedge accounting, meaning changes in the value of these derivatives are recognized immediately in their earnings. The purchases and sales of underlying price funds, excluding those in-kind transactions, were quite substantial over the 6 months, amounting to over $373 million in purchases and over $626 million in sales. This indicates active management within the fund family. On the tax front, they expect to continue qualifying as a regulated investment company, meaning they will distribute all their taxable income and gains to shareholders. This generally avoids taxes at the fund level. They also provide tax cost basis information, and it is interesting to note that the tax cost of their investments was around $4.4 billion. With a net unrealized gain of close to $845 million. This section on related party transactions is key. T. Rowe Price Associates Inc. manages the fund and also manages all the underlying price funds. So yes, T. Rowe Price is effectively earning fees from managing both the master fund and the underlying funds. Inclusive fee covers management and operating expenses except for things like interest expenses and taxes. The fee rates vary by class, with the I class being the lowest. This setup creates a significant amount of intercompany flow of money, which is typical in large fund complexes, but it is worth noting. Finally, the segment reporting confirms that the fund is considered one reportable segment because management assesses its performance as a whole. This simply means they look at the entire Retirement 2015 fund to decide how to allocate resources and evaluate results. So what is the takeaway from all this? Well, the T. Rowe Price Retirement 2015 fund is a massive operation, managing over $5 billion. It is designed for retirement, so it is no surprise to see a significant allocation to bond funds and a generally conservative approach with a low portfolio turnover. The fund's performance over the last 6 months has been positive, with strong gains from its underlying investments. However, the fee structure across the different share classes is a crucial point. The I class offers the lowest expenses, which is a significant advantage for larger investors. The heavy reliance on investing in other T. Rowe Price funds, while efficient, means that you're essentially paying multiple layers of fees within the same firm, even if those underlying funds are low cost. They are using futures contracts, which is a sign of sophisticated risk management, but also introduces complexity. Overall, the fund appears to be managed competently, with a clear strategy to provide long-term growth and income. But as always, investors should carefully consider the share class that best suits their needs and be mindful of the overall fee structure. Alright, that is our breakdown of the T. Rowe Price Retirement 2015 fund's latest filing. What is your take on these numbers and what they signal for the company's future? Do you invest in funds that operate this way? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives into corporate financial documents. Don't forget to check out the Discord community in the description. Thanks for watching, and see you next time on Corporate Decoder.